Sunday night, December 2nd. So the outcome of the Trump-Xi talks over the weekend at the G20 summit is, I guess you can call it a truce. Both leaders have decided to withhold the imposition of new tariffs. Further negotiations will continue. The market reaction is very positive right now. This evening in the futures, we are seeing the Dow up 460 points. We are seeing the S&P back up over 2,800 and the NASDAQ as well, a very powerful rally. So as I said 2 weeks ago, the stock market has bottomed out. The rally will continue, S&P back over 2,800. In addition, we also, there is news that OPEC and Russia have agreed to an extension of the output cuts. We are seeing a rally in crude oil at this hour, back above 52, I believe about 52.30 on WTI. Gold is moderately higher. The dollar is weaker. So all of these things that I said were going to happen, they are now coming to fruition. One thing I want to talk about is the bond market, where we are seeing a rally. This rally is a continuation of the rally which started last week from the comments by Fed Chairman Powell. Sorry about that. And you may recall that Powell's tone in his speech was on the dovish side. Some hesitation in there, some mention of softening in economic activity. So the feeling is in the market that the Fed will raise rates in December and probably pause for a period of time after that. So we should see a continuation in this bond market rally. However, let me state, this is a counter-trend rally in a bear market. The rate hike campaign of the Fed has not ended. It will not end. And I will go on to say that the relatively soft patch in the fourth quarter so far, where we're looking at GDP to have come down from a 4.2% growth rate in the third quarter to around 2.5%, 2.6%. That's probably a one-quarter phenomenon. We're going to have a pickup in growth and inflation from that on a number of things. First of all, the cessation of the trade war, at least for now, is going to help to restore confidence. We see that obviously in the stock market rally. In addition, rates have pulled back a bit, so I think people are going to be more relieved when they look at that. We are seeing the banking metrics, loans and leases, bank credit, etc., starting to accelerate once again. That is a very positive sign, and most of these bank metrics are at or near all-time record highs, okay? And it's the acceleration that's also very, very important. You wouldn't see that if we were going into an economic slowdown or a recession. So you have that going on. So these factors will come together to re-stimulate the economy. We will see an upturn in economic output once again. And I'd say in another quarter, maybe 2 quarters at the most, the Fed will resume its rate hike regime based on stronger growth, based on higher inflation. So you have maybe 1 or 2 quarters to play the bond market on the upside now. For those of you who want to maintain a longer-term macro short position, this will be a good opportunity to build that position as bonds rally. You can short them, you can buy inverse ETFs, etc. So we will have that. And of course, if you look at the US dollar, which is in a long-term downtrend, we've been through, 7 months of a counter-trend, maybe 8 months of a counter-trend rally. Some currencies, notably the Australian dollar, the New Zealand dollar, they bottomed already, and they have been moving higher. The New Zealand dollar has been ahead of the pack, followed by the Australian dollar. And while there are some, I guess, still some negative elements surrounding the British pound with Brexit and the euro, just with the political situation over there and the Italian budget, etc., those will be resolved to the upside as well. So all of the things that I have been talking about, they are coming to fruition. Stock market has bottomed. We will be in rally mode. Financials will be a very powerful sector, I believe. And so, yeah, that is exactly what is going on. If you want to get my reports, please go to pitbulleconomics.com and sign up for a 30-day free trial of MMT Trader or Zombie Trading. Remember, I am the only one who has put together an applied approach of MMT. A lot of people out there talking about MMT concepts. There are a lot of MMT academics and theorists. I'm the only one who combines the understanding of MMT from an economic perspective and a policy perspective, combining that with an approach to trading and investing. Applied MMT. Nobody else does that. Nobody else does that. So if you want to get my reports, if you want to get my emails, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader or Zombie Trading. All right, everybody. I hope you enjoy the rest of your Sunday. If you are, if that applies to you. Otherwise, tomorrow, of course, is Monday. I'll be putting out the new issue of MMT Trader. I'll be busy most of the day, but I will be sending out emails. So once again, very powerful rally in the stock market tonight. A Dow up over 460 points. S&P back over 2,800. NASDAQ, very powerful rally. Dollar is weaker. Gold is up marginally. Crude oil is up. Everything that I said. Bonds rallying, but that is a counter trend rally. I will be following that and making comments on that as it unfolds. That's it for now. See everybody tomorrow. Bye-bye.